Very pleased to welcome a very important conversation that I feel like a lot of folks don't realize, the power that insurance regulators, and the insurance industry can play in shifting behavior. Where do we build? Where don't we build? Do we build in the wildland-urban interface and have fire risk? Do we build in floodplains? So changing behavior and the power of insurers, insurance regulators. We have a global panel joining us that was curated by my friend Jay Bruns. Jay is climate change advisor to the Washington State Insurance Commissioner, Mike Kreidler, who will also be joining us on stage. Jay was the private sector engagement advisor to the UN Environment Program, and previously was at the Hartford, where he led their environmental stewardship programs. He was, before that, in the senior foreign service and represented the United States all over the world. So thank you, Jay, for curating this important session, and please join us.
Well, good morning, everyone. I'm Jay Bruns, and it's my privilege to moderate this panel about where and how insurance intersects with climate change. First off, I would very much like to thank Amy for bringing together what is really a very diverse, thoughtful, and interesting group, and to listen to how what initiatives they're taking to affect the course of climate change. So it's really exciting that way. As the panel comes onto the stage, I just wanted to say that the role of insurance in addressing climate change is important, it's complex, and it's largely opaque to the public. So hopefully over the course of the next hour, we'll offer a bit more transparency on exactly how insurance interacts. I'm going to be introducing each of the panelists in series. You can see on your program who we have, and I'll talk a little bit more about them as they make their presentations. Each is going to start with a brief opening statement, and then we'll have a 3-minute video, and then we'll have the panel discussion. And we plan to allow time for audience questions. So I would like to introduce the panel, but since they're not quite up yet, I will wait for their arrival. Well, now I would like to introduce the chair of today's panel and my boss, the Washington State Insurance Commissioner, Mike Kreidler. Commissioner Kreidler has, like kind of Hillary France, who spoke earlier, is also an elected commissioner of the state of Washington. He's the longest serving state insurance commissioner in the country, having been elected by the 7.5 million citizens of Washington state for 5 times into this role. Previously, he was sat as a member of the US Congress, representing a district in Washington state. And prior to that, he was a state legislator. I think Mike has been on the front lines of climate change for a very long time because early in his working life, he had a career as a smoke jumper. So with that, I'm going to turn it over to Mike.
Thank you very much, Jay, and thank you for your good efforts. And I want to thank Amy, too, for what she's done with this whole event, and Jodi and Olaf and Don. Thank you very much for participating in this program. The issues around insurance are something I think many people would say, we're talking climate here, why are we talking about insurance? And I think what really starts to drive it home is just how much of the economic activity that takes place globally, much less what happens just in the state of Washington, much less in this country of ours, is really tied to being able to have the security of having insurance behind you, and how fragile it can be in the face of climate change under certain circumstances. With that, I've had the opportunity to be the chair of the Climate Change and Resilience Work Group for the National Association of Insurance Commissioners. With several other states, we have surveyed since 2010 all of the states through all of the states, but to all of the insurance companies doing business in the United States to ask about their practices and issues around climate. In my own home state, we just adopted legislation that would create a work group that will deal with the issue of resilience, which I will be chairing some 30 different state agencies, including Hillary Franz, who was just here, will be participating with that particular work group. But maybe to give you a little bit better view of just what insurance is and the connection with climate is all about, I have a small video here, or short video, I should say, that I'd like to have everybody see.
The Office of the Insurance Commissioner's mission is to protect consumers and to look after a healthy insurance market. Climate risk threatens both.
In Washington State, fire is a very major factor. Flood is another significant issue. Sea level rise here in the state of Washington. We're looking at the impact on our economy potentially. We're very reliant on hydropower. We've benefited as a state tremendously with hydropower. Is it going to be available in the same way in the future?
We can expect more and more of these extreme events. We can expect to see it continually getting warmer. We'll expect to see much less mountain snowpack, much more frequent floods and droughts, and lots of impacts on our buildings, our roads, our highways and bridges, and lots of impacts on our communities.
This is not an east side or a west side of the state issue. Wildfires are happening on the west of the Cascades, and flooding occurs on the east side of the Cascades. This affects all Washingtonians across the state.
Big insurance companies already know that the risks are rising. Sea level is rising, risks of hurricane is rising, and as we see here on the West Coast, the risks of wildfires is rising.
If the insurance companies perceive the risk to be very high to them, that they could have significant losses where they have written policies, they're not going to want to write as many or any policies in those areas.
The insurance industry is involved with climate risk because property damage claims have been rising over the last 5 years. The cost to repair property from wind, from flooding, from storm surge, from wildfires has gone up and up and up.
Once consumers, insurance policyholders, all of a sudden start to realize that they can no longer afford their policy, that a $500 policy has gone to $3,000 per year. All of a sudden, when that strikes home to them, they're going to start to say, I can't afford this any longer, and I'm going to look for another insurance company. But if all of the insurance companies are acting the same way, you don't have even choices at this point. Some companies have pulled out of markets. Other companies have raised their rates considerably higher. So at that point, you become very vulnerable. The insurance buying public wants to know that insurance is going to be available and affordable to them when they need it. And that's the role of the insurance regulator. We want to make sure that there's an active market out there, so there's competition among insurance companies, and we want to make sure not only that it's available, but it's affordable.
Well, now I would like to introduce our next panelist, Jodi Bond. As you can see from your program, Jodi is currently the Executive Vice President for Global Government and Industry Affairs for Chubb, which is one of the largest insurance companies in the world. Jodi has some association from around here. She, well, first she did a lot of things before coming to this job, including working at the U.S. Chamber of Commerce as well as for Motorola. But Jodi has connections here, and she was on the ski team for Whitman College. To show how small the world is, when Jodi was in high school, she worked on Mike Kreidler's campaign in the state legislature. Jodi.
Oh, Jay, thank you so much. And thank you to Amy for introducing this panel to the lineup. It's special to be on stage with everyone here, but especially when I heard the commissioner was a part of the panel, it was kind of like going home. Being born and raised in Olympia, Washington, climate issues and understanding, the need to reuse, recycle was just a part of our ethos. And here I am 35 years later, and I'm working for a CEO of a company who understands that climate change is just part of the understanding of our company and running the company very well. We were a company called ACE Insurer, and a couple years ago we bought Chubb, and that did make us the largest property and casualty insurer in the world in 55 countries. And what that means is we really had a front row seat in terms of the impact of climate. And our CEO has been taking action within the company for quite some time, but more fervently in the past couple of years has been talking about it in our shareholder letters. And as he said recently, the evidence of climate change is immediately apparent, profound, and disturbing, and the time for action is now. So what I wanted to just touch on real quickly are 3 different things that our company undertakes to look at in terms of climate change and resilience. First, I'll talk about how we integrate climate change as an integral part of our business management decisions. Next, a little bit about resilience initiatives that we support. And then lastly, the commitment we've made to our own environmental footprint. On the first front, we integrate climate change into our business management and risk decisions through responsible underwriting. And we use internal and external data together with sophisticated analytic catastrophe loss and risk modeling techniques to ensure that an appropriate understanding of risk actually manages our portfolio of investment decisions so we have money to pay out when these catastrophes happen. But within that, our risk engineering focus is to restrict our underwriting to companies and projects that where excessive environmental risk or poor safety standards are present, is to not take on those projects because we believe this promotes more environmentally responsible behavior overall. One example of that is our recent decision earlier this month to no longer underwrite the construction or operation of coal-fired plants or new risks from companies that have more than 30% of their revenues from coal mining or energy related to coal. And while we've been looking at climate change and risk for over a decade and taking on not investing in projects with poor environmental risk standards, as part of our business ethos, our CEO, Evan Greenberg, has said, this coal policy really just reflects our commitment as a steward of our planet. In that, apart from underwriting, we also support resilience initiatives, and we do that through our Chubb Charitable Foundation. And one set of examples is our work with the Nature Conservancy. Just 2 projects I'll bring up. One is on the Mesopotamian reef along Mexico's Yucatan Peninsula, which helps which helps with the economy and infrastructure and to protect it against storm surge. And so we've invested in a revitalization of that. We also, in 2018, our foundation made a major grant to the Nature Conservancy for a wetlands restoration and resilience project in the Miami-Dade area. And we're using that as a model to build out and replicate in other projects along urban and coastal areas. What's critical is people are moving to more urban areas and to coastal areas, and the risk is higher, both economically and from an infrastructure standpoint. But lastly, and importantly for companies, is we've looked at reducing our own footprint throughout the years. And we have a program to measure, record our greenhouse gas emissions. And we've been doing that since 2006. But from 2015 to 2018, we reduced our global greenhouse gas emissions by 21%. And in May of this year, we actually announced that by 2035, we'll have reduced them by 40%. And that's a goal that's aligned with the 2 degrees Celsius target of the Paris Agreement. So with that, again, we integrate climate change into our internal business risk management model. We support resilience initiatives, and we look at our own footprint. Thank you.
Thank you very much, Jodi. I know I'll have some questions for you, and hopefully the audience will too.
Okay.
I'm now turning to Olaf Sleijpen, who is, his formal title is Director of Insurance Supervision at the Central Bank of the Netherlands. So he works at the equivalent of the Federal Reserve and regulates all insurance in the Netherlands. I think he is at least in the running for the prize for coming furthest. He came here from Amsterdam and arrived the other day, and I know I went on a hike with him, and he was doing very well given the time difference and the time, the jet lag. And in talking with Olaf, well, first Olaf and Mike Kreidler sit together on something called the Sustainable Insurance Forum, which I think we will, it's a collection of regulators internationally who care about this. We'll hear more about that from both of them. But just a little fun fact about Olaf, he maintains a strong interest in Lego and continues to purchase and work on Lego. So I think that's kind of cool. Thank you, Olaf.
Thank you very much, Jay, for the kind introduction. It's really great to be here, and it's also great, actually, all those days to talk and interact and mingle with the great folks actually out there that I cannot see now because of the light. But it's really, there's a really very good vibe here. Maybe I get the prize for traveling furthest, but I learned actually that I'm not the first Dutch national actually sitting up here. There's at least one I know of who has been already on the stage. Indeed, I'm in a way Mike's counterpart in the Netherlands. Difference being that I have not been elected. Thank God for that. And probably makes my life a little bit easier. Indeed, we are, a central bank, we are also responsible for insurance supervision and regulation. And a couple of years ago, 4 years ago, we decided to integrate basically sustainability in our mandate. Central banks are typically known for maintaining financial stability or price stability. And if you talk about climate change, it is having such a huge impact on our economy, you cannot ignore it if you feel responsible for financial stability. And so that's actually what we did. So in every kind of our activities, be it our reserve management, be it banknote production, but also in supervision regulation, it's one of the key objectives. And it's not only climate change or fighting climate change, we also try to take a little bit broader and look at the Sustainable Development Goals. So what do we do turning to insurance? First of all, indeed, we are looking on both on the risk side as well as the opportunity side. We ask insurance companies to take into account the risks of climate change in their risk management. We ask them to do scenarios with what can happen in terms of their underwriting risk, what can happen in terms of their market risk, when you think about stranded assets. But of course, it's also an opportunity. It's an opportunity both for underwriting, but also very importantly, insurance companies are huge investors. They're very important institutional investors. And the financial sector is key in, let's say, bringing all those great initiatives that we have been hearing the last couple of days, in bringing them along. You need money to do that. And it's not that we're telling them what to do. That's not what we do. It's not the task of the regulator, but at least we try to facilitate that and not come up with impediments or burdens, allow actually investments to go to the transition of the economy. And yeah, that's basically what we try to do. I think we were internationally one of the front runners, maybe together with the Brits. There's the famous speech by Governor Mark Carney about the tragedy of the horizons. And now we are also indeed in the process of trying to bring that further internationally, and we will talk about it later, in the community of insurance regulators, but also community of central banks.
Thank you very much, Olaf. And Olaf has touched on a very important point, how, you know, insurance is the underpinning of all developed economies. And in the United States, it represents about 3% of our GDP. The 6,000 insurance companies operating in the United States manage about $5.5 trillion. So figuring out how to get them to deploy that to get us to a low-carbon economy more quickly would be great. Thank you, Olaf. Now turning to Don Jergler. Don is the Western Region Editor for the Insurance Journal, so he is a journalist whose expertise is insurance, and Don has written extensively on that and knows the Commissioner Kreidler from that role, and also has done some interesting research as well as articles on the nexus between insurance and climate change. So Don, the floor is yours for the next few minutes.
Oh, thank you. I'll be pretty brief. I don't have a lot of background to talk about. At Insurance Journal, we cover a variety of topics. We don't cover the life or health industry, but we do cover property casualty insurance. So that's workers' compensation, cyber liability, professional liability, that sort of thing. And up until, I'd say, 5 or 6 years ago, climate change was not something we thought about covering. And I'll get a little bit more into my experience of how the industry has evolved in dealing with a reporter on climate change a little bit later. But we went from maybe running a headline once every 2 months, that said climate change or global warming, and we didn't even know the difference, to now, I'd say 3 or 4 a day run, much to the chagrin of some of our commenters who don't seem to like the topic a lot. But it's been an important part of what we do. The headlines, the metrics that I read on these headlines that I post or that I write are incredible. I mean, the hits that we get outpace just about every other topic. Some of it's interest, some of it's, people want to get on and read the article and then bicker about it. But we've got a lot of interest. We've got a lot of advertising, probably opportunities coming from this sort of nexus.
Thank you very much, Don. And I also wanted to mention a fun fact about Don. He has, in the journalism world, has also represented journalists as a union representative. Is that? Yeah, so that was interesting too.
Yeah, another battle.
Well, let me go around and ask first round of questions anyway to Mike Kreidler. At the national level, the National Association of Insurance Commissioners, this is a group of the 50 state regulators in the United States who get together, and there is also quite a large infrastructure for these regulators. So they get together, constantly throughout the year to coordinate on all kinds of emerging insurance issues, everything from cybersecurity to cannabis now to AI. And you have chaired the working group on climate risk and resilience now for 10 years. What caused you to want to run that working group, and what would you say is the largest accomplishment from those 10 years?
Well, I think one is it just my personal interest. When I was in Congress, I served on the Energy and Commerce Committee, on the Energy Subcommittee of Energy and Commerce, and was very involved in some of the very early work about some of the efforts right now to try to stabilize the amount of carbon we were putting into the atmosphere. So even going back to there, but even in the state legislature, it was a passion for me. So once I became a commissioner, I had the opportunity, and working very closely with a couple of other like-minded individuals to really heighten the awareness and the excuse me, heighten the involvement here of my fellow regulators, so that we all started to really focus in on the risks. If we back away from insuring certain risks, which I mentioned, it becomes seriously problematic. Politicians have a habit of interjecting themselves and saying, no, you won't leave that market. We have ways of making sure you stay in that market. And those rates you want to charge, we think they're excessive. So you're going to be exposed to increased risk, not able to receive the kind of premium that would cover the risk and exposure that you have. And the other side are the investments. What happens if a stable part of the investment portfolio for historically were coal-fired electrical generation plants? Well, you know, those kinds of bonds were really stable when I came in as insurance commissioner, and have dramatically changed. Now they're a liability, and looking at the impact of natural gas, much less the release of carbon into the atmosphere, is something that you start to say, this isn't going to be economically viable, and it's going to inure a very strong public reaction to it. So that's why I got involved.
Jodi, you mentioned the leadership of your CEO. What do you think prompted him and your company to get so outspoken in relation to, there are many insurers who I would say are doing the right thing but don't like to talk about it much?
He's detail-oriented. Data analytics and mapping, there's no possible way that you could be around that much science and the capabilities we have to look at catastrophe-related analytics and the geomapping capabilities that we have, and not really understand that this is all real, or be talking about it as a potential economic threat in any way, or run the company well without acknowledging it and acting upon it. So he also, though, I've seen the transition too, that it's not just about how we run our business, it also is part of how he feels about our planet, and that we should all take responsibility to be stewards of our planet. And as a company, we can play a leadership role in showcasing that ethos and how we go about doing what we do.
Thank you. Turning back to Olaf, I'd be interested in hearing a little bit more detail on how the Netherlands is working together with the Sustainable Insurance Forum. And as you know, SIF is a subset of the International Association of Insurance Supervisors. And from your perspective, what is that body doing, and how are they interacting with this Sustainable Insurance Forum?
Yeah, the Sustainable Insurance Forum, it started as a small group, actually 7, and both Washington State and the Netherlands were among the founding members. I think now we're 25 in a relatively short period of time, and I think still growing. Last year we published a paper basically outlining the risks of climate change for the insurance industry. We're now working on a new paper on disclosures. I think the trick is to make it mainstream. When we started also the Dutch Central Bank working on this 4 years ago with a relatively small group of people, there was actually a lot of opposition also inside, and they said, I mean, what are we going to do? What does climate change have to do with monetary policy? Those are, you know, the people advocate. We're not. They're kind of, you know, a group of green lefties, if you want. But that changed in basically even maybe 1.5 years. Why? Because you have to make it mainstream. climate change risk is exactly the same as interest rate risk. It's exactly the same as market risk. You have to put it in the same category. And then people try to, and they understand, say, yeah, you're right. You know, if you show them numbers, and indeed, as Jodi was saying, the use of data is extremely important. And then it becomes like, yeah, basically regular. And I think that's the trick, and that's what we're also doing in the Sustainable Insurance Forum, to kind of present it in a way that our colleagues know. And then they realize it's not something, you know, small crew of people is doing, it's politically motivated, not at all. And then they understand it is about plain risk management. And I think that's the trick, and that's what we're trying to do, and that's what a growing number of jurisdictions is grasping.
Thank you very much. I think, Don, you've probably whetted the appetite, certainly of me and others, talking about how the quick rise of interest. But I'm interested in hearing about your own observations and what you're seeing and how you've been reporting on climate and insurance.
Well, yeah, I think the thing I've thought about most is how things have changed in 5 years. And I started reporting on climate change about 5 years ago. I proposed it as a column because we were just starting to post some stories on this. And I figured, okay, I could probably do a column a week, maybe a column every other week. Let's be safe, let's do a column every other week. And to be honest, I was really starved for topics. If it weren't for the commissioner here and Commissioner Jones of California, I would have no stories. Anytime I went to an insurance carrier to try and breach the subject, I pretty much got shut down. I either didn't get an interview or I got funneled off to a public relations person. And the conversation with them was something to the effect of, okay, well, what does your story focus on? How much of it will focus on climate change? And of course, they would preface the interview with a warning. The executive is not going to talk about climate change, say the words climate change, talk about global warming, so on and so forth. And that's generally how a lot of the interviews went. And the interviews, basically what I had to do is focus on stories on the weather. Stories on, resilience, and insurers do like talking about resilience, and it just kind of went on from there. In fact, the most common, when I did pin someone down, an insurance executive, the most common thing I heard about climate change was that property insurance policies are renewed annually, and climate change is a long-term risk. So one has nothing to do with the other. And the other refrain that I heard was that the insurance industry doesn't have much of a carbon footprint. And I had heard that from numerous people. It does, compared to maybe the trucking industry, it doesn't. But, and then recently you hear phrases from experts and climatologists like, we could be facing an uninsurable world. And it seems to have kick-started something. You hear movement on the part of a lot of carriers. You hear a lot of activity. You hear a lot more talk on it in the last couple of years.
Thank you, Don. We have about 25 more minutes. I'm going to do one more round of questioning, and then I'm going to turn it over to you to see if the audience has questions. Mike, you've, with this 19 years of tenure now, you're one of only, I think, 11 insurance commissioners in the United States who are elected. You've seen lots of other insurance commissioners come and go. What takeaway do you have about working with elected and appointed commissioners on climate?
Well, I think you certainly have, as being elected, you have the responsibility here. You don't have, you can't turn to the governor's public affairs office and have them cover for you, or have the governor's office cover for you. You're on your own, and that's sometimes maybe a liability, but other times it's a liability not to be able to. So I don't have to ask anybody. I have to make my own calls on these issues, and it gives me a great deal of independence. And you've certainly seen that true in particularly California, where they've been very open to speaking out. Again, an insurance commissioner who was elected as opposed to being appointed. And part of it has been, of course, the challenge is that we were almost up to 2/3 of the states that were either had insurance commissioners who were elected as Republicans or were states that were red because by virtue of the governors, and it became a non-starter. You could not talk about climate. So I like and that's been a challenge at the national level. It's just trying to bring along my peers and saying, hey, this is one where let's talk about resilience. We don't have to talk about human activity and things like this. Talk about resilience because we have a responsibility here to make sure that insurance products are something that are available and affordable, or the economic activity that we all are very dependent upon as countries and as a world could be seriously compromised. And that's the effort. And I think by virtue of being elected, I don't have to look over my shoulder and ask other people. And I think that's something that I prize from the standpoint of being able to speak out. So when good people like Don Jergler call me, I don't hesitate. I'll jump in with both feet. And my public affairs people said, is that what you really wanted to say? And I said, heck yes, I did.
That's true.
Well, Jodi, you've talked about it already a little bit, but I wonder if you could get more specific about how your company's underwriting or investment portfolio has changed because of the company's increased focus on climate.
Yes, some of the data and analytics and our mapping tools have showcased to us how to both shift our underwriting and also to shift our investment portfolio. The underwriting, you've got to make sure you've got enough premium in order to cover the costs. But really, when catastrophes hit, you need a pool of money to be able to pay out. Banks don't keep cash on hand, but in general, but insurers do. They must, because when a natural catastrophe hits, you've got to find different ways of either through your investment portfolio or through some reinsurance, some pooling together of money to be able to pay for that. And we found that not underwriting, and we started this process, it's been a little more than a decade ago of underwriting some environmentally unsafe areas of property and insurance in the casualty areas. We found that that our portfolio risk return would be better than if not. And it was all based on our analytic mapping and data tools. But I just have to say, just traipsing off the comments that have been made, I mean, $144 billion were paid out due to natural catastrophes last year by the insurers. When you change the semantics to make them palatable, and you talk about resilience, everything that's been happening is almost biblical in nature. And in order to cover that, I also think that resilience activities or resilience policies are important. And we're about to look at the National Flood Program as a country. And it's time to revamp how we think about the National Flood Program and potentially bring private insurers into a piece of it, because the data analytics and mapping, the geomapping capabilities are completely different than they were 20 years ago. And yet the government should be also offering a safety net to those people that live in those areas that will inevitably be affected. I mention that because when you have a big renewal or rethink of a policy, you have the chance to actually talk about what we're talking about today. And that's a way to bring others into consciousness and to conscious action as well. So.
Thank you.
Yeah.
Excellent.
Olaf, the Netherlands and the Bank of the Netherlands has a leadership role in financial services in another important way that some of the financial services people here today may know about. It's called the Network for Greening the Financial System, or NGFS. I wonder if you could talk about what you're doing there and what it is maybe, and then what you're doing there.
I mean, the NGFS is, in a way, it's similar to the CIF, but it's a network of central banks and financial supervisors, regulators, they want to work together indeed on climate change related issues. Started 2 years ago with a very small group, also 8 central banks, and now we are, I think, 50, together with a number of observers, and actually the CIF is one of the observers to the NGFS. It's really a global coalition, so we're talking about central banks and regulators from all over the world. On the North American continent, there's only one country missing. Guess which one? Having said that, you know, in the context that we have, obviously, state of Washington, California, the insurance commissioners, but also with the Fed in San Francisco, they're extremely interested, and I'm pretty hopeful. You know, we can also convince the Board of Governors of the Fed that, you know, it's good to join, and by telling them, listen, this has nothing to do with politics, because that's what they're afraid of. But it has to do with economics, you know, it has to do with financial stability. So I think they're kind of turning around there. So I'm very hopeful that also at a certain point the Fed will join. We're working on 3 issues, basically. First one indeed has to do with supervision regulation, in particular for those central banks who are also regulator supervisor, but they're also just regulator supervisors have joined who are not central bank. There's a second work stream working on stress testing, climate stress testing, the impact of climate change on financial stability. And there's a third one on what central banks or regulators can do themselves. And this, for instance, has led the Dutch central bank to sign the UN Principles of Responsible Investment in investing actually the reserves, the currency reserves of the Netherlands, and it's the first central bank in the world who's done that. So that means that we are managing actually the reserves of the country completely in line with those principles of responsible investment. I think it's hugely successful, and indeed, if you look at the conferences, the papers, etc., it clearly has shown, what I said at the beginning, that climate change, thinking about climate change risks, what can we do about it, what is the impact, has become, let's say, mainstream. And I think that's what we should do, should try to do. And I think Europe, to be quite frank, is a little bit ahead of the US in this respect. Also, when you look at regulation, one of the things is it's not a partisan issue. It's cross the mainstream parties in Europe all believe we have to do something about it. And they may have different views exactly on how to do it, but it's not an issue anymore. And I think that's really driving also at the level of the European Union in getting things further and getting the right things done.
Well, I think it's incredible to hear that the Dutch Central Bank has signed on to the principles for responsible investment for all of the investments they make.
Yeah.
Mike and I will be in New York for an NEIC meeting next week, and we'll be meeting with the head of North America for PRI, so we'll be interested in having that conversation as well. Don, just any views on how you've kind of tracked what insurance companies have done in this space? What companies would you point out as leaders in this, and what have they done, and are there any laggards that you would point to?
Probably no laggards, because a lot of the U.S. insurance industry seems to be a laggard. Chubb certainly not. And then we had a story on Chubb doing some divesting and some moves they made. That was one of the biggest stories. Liberty Mutual did some of the same things. In the last few years, you've seen a lot more insurers publicly announce that they're going to divest from fossil fuel on the investment side, and on the underwriting side, they've actually committed to not underwrite certain fossil fuel projects. Since 2017, I guess 15 insurers have restricted their insurance activities on coal projects, according to some data I got from the activist group, the Sunrise Project. Among those are Allianz, AXA, Chubb, Munich Re, Swiss Re, and Zurich, all very, very big companies. Again, Liberty Mutual in June, they publicly confirmed that they won't be insuring the controversial Carmichael coal mine project in Australia, and a lot of insurers have kind of backed out of that one. Some more data here. 11 companies have adopted policies to stop all direct insurance coverage on new coal projects. 7 have restricted their insurance services to existing coal projects, and 6 insurers have adopted policies to restrict the insurance coverage to coal mining and power companies. And a lot of these commitments have time frames, and some of them have clauses, but some of them, to me, I've been reading them, are fairly aggressive. You know, it seems like a lot of the important insurers are pulling out and leading the way instead of regulators and activists leading the way, which has been the case up until, I'd say, the last few years.
Thank you, Don. Well, I'm going to turn it open to questions from the audience. And when you ask your question, I hope that you'll identify yourself and then ask who you would like to answer the question, or if the whole panel, that would be fine too. Yes.
I am Margaret McDonald Stewart. I've lived here in Ketchum for 47 years. My question, I'm not really sure who could answer it. I hope I'm mistaken, but as I understand it, quite a few insurance companies, if your home is flooded and wiped out, if your home is burned down in a forest fire, your insurance company will pay you only to rebuild where your original house was. Is that true? And if so, why?
I'm not sure I know the answer to that question, but I'm going to turn it over to Commissioner Kreidler.
Well, good news was that I had an opportunity to take a look at a real disaster. The bad news is I did have to go to one, and Jay and I both went to Paradise, California, to take a look at the devastation of that fire, with literally thousands of houses that were gone.
Yeah.
A number of those people are relocating to another community and are receiving insurance payments to allow them to do it. The biggest constraint has been what is the value of the property, of the structure, and the insurance that you had for coverage. Was it at market value at that time? And frequently, rebuilding is difficult any place you go, but if you're trying to rebuild in that particular footprint, trying to come back and rebuild, particularly if you have not incorporated a number of the improved standards that should be there to make sure, being fire-wise, to try to prevent this from happening again to your structure. And even in those communities, the comparison between the communities that were newer and met the higher standards as opposed was stark. The ones that had not suffered considerably a great deal more harm. But there are some policies out there. Again, it's one of those where talking to your agent, broker, or your company and getting a clear understanding going in before the catastrophe strikes to make sure that you have the kind of coverage you want is the best approach to take. And part of that would be under circumstances such as replacement value, and if I had to relocate, how am I going to be paid on my policy?
Yeah. Go ahead. Yes.
Hi, good morning. Stephen Schofield from South Pole. In recent years, Insurance Commissioner Dave Jones of California, one of your peers, implemented some policy directives to the insurance industry corresponding to carbon asset risk disclosure and your assets under management. And as everyone probably knows, Commissioner Jones has now turned out. And I guess my question primarily, I guess, would be for Commissioner Kreidler. Where does that policy landscape go from here? Does the state of Washington have any intention to take up what Commissioner Jones had started? And what would you envision for the rest of the country and the other states with whom you're collaborating?
You know, that's a good question, because when Commissioner Jones was heavily involved in doing that work, and needless to say, it was extremely controversial at the time in doing it, particularly where he suggested divestiture as a part of the reporting requirement on specifically on greenhouse gas emissions and things like this. I think that's something that I'm continuing to take a very hard look at, but I'm also thinking there might be a better way of being able to do it, and or at least it's one that perhaps has a little bit more participation, and that is one of the kind of survey that we've been doing since 2010 of the companies as to best practices, getting more specific as to the kind of questions that we ask and responses that we get. And I'd like to think that the industry, once they start to realize that their peer groups are making this shift, much like Chubb is doing right now, and Liberty Mutual and some of the other companies, we start to highlight that. We start to make it easier and, quite frankly, very difficult for those companies not to follow in kind. I'd hope we don't have to go in and try to use it, but with the power of the law. It's one where we get to the point where it starts to make good sense, and it's one where your peers are doing this. They're being financially rewarded by taking these kind of steps, and we'd like to see that mimicked.
I see a question up here.
Yeah, this is a question for Jodi. Olaf mentioned, I think, that they have some regulations or some encouragements of banks in Europe where they're encouraging investments in aligned ways, maybe some impact investing or things that are in support of managing some of the risks. I'm curious if Chubb is thinking about investing in an impact-related way as well.
So in general, one of the things we had been talking prior to the panel, we were talking about our investment portfolio and how we disclose certain aspects of it, but we don't really talk about it in sum total or in detail. What I can say is that we've weighed the consequences from a financial perspective of not making the right investments with those that we could be making in new and emerging areas. And insurance companies have to be about as stable as they get to make sure that portfolio is grounded so that we are financially capable, given the risk appetite we have, to be able to pay out. And it would seem to me that there are enough arguments that investing in sustainable aspects of portfolios is a good investment versus those with a high environmental, problematic, risk, hazmat, etc., set of exposures of the past, which you had actually touched upon. These portfolios you thought were stable are just not the right portfolios to be investing in. So I can't say where we have done it in detail, but it is one component of the way that we look at stabilizing that portion of our company, which is what makes us capable of underwriting everything that could possibly be.
Thank you. If anyone else has a question, please put up your hand. In the meantime, I'm going to ask another one, and that is of Olaf. Curious to know, can you give us a little more detail what SIF is trying to do with the Task Force for Climate-Related Financial Disclosures, or TCFD? I'm very happy that Bruno, in an earlier panel, socialized that idea. So it's not the first time you've heard it, but I wonder if you could say
No, indeed, it is. It was already mentioned in one of the previous panels that under the Financial Stability Board, which is kind of a high level below the G20 kind of group of ministers of finance and central bank governors, and they have commissioned, also under the leadership of Mark Carney when he used to be the chair of the FSB, they've commissioned Michael Bloomberg and to work on, and that was the interesting part, on an industry-led initiative, how companies can report on and disclose on, let's say, their CO2 footprint. And one of the things now being done by the SIF is to try to turn that into recommendations for the insurance industry. And that's a paper that I think will be published somewhere, hopefully in the autumn of this year. And now indeed gathering the data and working together on this. Because indeed having an international standard, a reporting standard or a disclosure standard is one of the big impediments, basically, to sustainable finance. Everybody will tell you that. All the banks, all the insurance companies will tell you that. And now they try to do what they can, but they use standards that are not universally accepted, so which makes it, again, very difficult for investors to compare. So I think it would be great if we would kind of get, in the end, at the level of accountancy rules, but also at the level of financial regulation, some kind of standards. And I think this is a very good first attempt to see whether we can come up with something that finds its way in the basically global insurance standards. And I think that would really be a big thing.
Well, very good. I think I've been told we've come to the end, so we'll look forward to talking with you about these questions over lunch and afterward. And I very much want to thank the panel, and thanks to Amy and the Sun Valley Forum for having us. Thank you very much.
Thank you.